Hi guys, welcome to this Moneycontrol live stream. You're watching IPO Watch with me, Nandita Khemka. Well, the last couple of months has seen a barrage of IPOs hit the markets, and today, of course, we will be focusing in on the IPO of Pine Labs. Now, if you've shopped at a mall, gone to a cafe, or even paid at an airport store, chances are that you've already used a Pine Labs machine. Now, Pine Labs, of course, is a fintech player that has become synonymous with the digital payments across India's retail landscape. Now, of course, it's gearing up for its landmark moment. It's eyeing its D-Street debut. 3,900 crore rupee IPO opens on the 7th of November. Well, to talk about the future plans, the vision going forward, I'm now joined by Amrish Rao, who's the Chairman, Managing Director and CEO of Pine Labs. Amrish, first of all, lovely chatting with you here on Moneycontrol. Amrish, wherever you go, be it a mall, be it a cafe, be it an airport store, you're everywhere, practically everywhere, barring my living room, so to say. But of course, now you will also be a part of portfolios of retail investors as well. Uh, you've been around since 1998, a long time, but still you guys are perceived as a point of sale machine company. In our earlier interactions, you had mentioned that you wouldn't want to be seen just as a POS machine company, right? So how would you like to be perceived by investors, and tell us what differentiates you from your competitors?
See, first of all, fintech is a very, very broad space, and you would have seen that over the last 15 years' time, just the evolution of fintech in a country like India. Let me point this out that India is really the hotbed when it comes to innovation in the fintech space. So, about 15 years back, the story was entirely about plastics and cards and how transactions will be completed. And that's where POS became extremely important. May that be at petroleum companies or hotels or restaurants. Wherever you go, you wanted an acceptance for your card. And that's where we went into POS deployments. Interestingly, we took a different position than others, wherein we said we want to focus on building the most useful POS technology, which not just meets up to the current requirements, but is also futuristic in terms of how a POS is being looked at. So a POS which started off purely like a calculator in our head actually operates much more like a screen which has a payment device attached to it. Effectively, what I'm trying to say is we look at ourselves owning the checkout. Once you're owning the checkout, you get to do a lot more services than just payments. May that be into loyalty, rewards, cashback, installment payments, all the various form factors are being consolidated by us at the checkout. Now, that, for example, today is what we put under the unit called digital infrastructure and transactions. Let me go into a little bit more detail about what are the four lines of services we operate in. The first one, as you correctly pointed out, is the POS business. But we see a very big opportunity coming along where we are seeing banks and financial institutions, brands, fintech coming up with very unique offers for their consumers, which they want to display at the checkout point, and we enable for those services. One of the easiest ones to understand is what is happening around installment payments. So we do a lot of these EMI transactions on our platform, but we also enable for transactions from district, from cred, from other institution at the point of purchase. So that's almost now become a second line of business for us. The third line of business is where we are investing into the future. We think more and more transactions will happen online. For example, BBPS or bill payments that you and I make for electricity bill or water bill payments, all of that has now been digitized. We are one of the market leaders when it comes to processing of all bill payment transactions. So online and bill payments is the third line of business that we operate in. And then the last one, which we are doing extremely well, and that is almost about 30% of our revenues, is we are one of the largest providers of prepaid services. So as you would know, prepaid cards, may that be gift cards or forex cards or cards which has value stored onto it, it has a fairly complex backend technology required because you're storing money, you're storing data, lots of millions of transactions are happening. All of that we process it on our platforms. 30% of our revenues comes out of that business. So if you actually look at now the diversification of business, starting off from a POS business, we've gone from POS to applications and offers and installment payments to online and then bill payments. And then we are also doing all activities around account, holding of money, prepaid, credit processing, all of these services we do. We're a tech first company. When you look at the word fintech, we think we are the tech of fintech. We don't do anything in the lending space or financial services space.
Right. But how are transaction volumes shaping up since you speak about all these diversified streams across UPI, credit cards, especially post GST rationalization? Are you seeing an uptick? Digital spends, merchant activity, has that seen a very, very big uptick after GST rationalization?
Absolutely. You would see that over the last 2 to 3 years' time, UPI transactions have grown by about 20 to 25% on a year-on-year basis. Coming to our business, over the last 3 years, we've actually compounded at a transaction level of more than 50% on a year-on-year basis. When you look at the number of businesses and merchants which have signed up with PineLab for services, there we've actually grown by almost 30% on a compounding basis. And that has been the case over the last 3 years. So as far as our business is concerned, we've been able to show consistent transaction growth, merchant growth, value being processed over the last 3 years.
All right, value being processed. Now let's come, a little towards the issue size as well. That's been a talking point in the market as well. Earlier, it was supposed to be a 5,800 crore rupee issue. Now you've come down to 3,900 crore rupees. Would you call yourself being realistic or playing it safe? I mean, how would you, justify this move?
Let me break it up into two parts. See, what happens is when you go out with your DRHP, you tend to show what is the primary amount that you want to raise. We went out first with a primary amount of about 2,600 crores. Out of that 2,600 crores, we had three or four major usage of this capital that we are raising on the primary. One, for all the technology and product related investments that we are doing. Second, we said as we go international, we are currently present in about 20 countries globally. Almost 335 crores of our revenues annually last year came from global markets. We think there's a big opportunity there. So we earmark some money for going into global markets. And then third, what we said was we will then keep some money related to unidentified acquisitions. We also kept a small component, which was almost about 25% towards retirement of debt. So we had about 800 crores of working capital requirement. So we said we will try and retire that. Over the last 2 quarters, you would have seen our financial positions and our financial returns have improved significantly. So we said we don't really need to retire the entire 800 crores of working capital and we reduced that amount. That has meant our primary has been reduced. As far as the secondary is concerned, we always had an enabling provision about how much our investors would want to sell. As we came close to the actual RHP filing, this is all that we had in terms of supply from our investors. All put together, we came in with about 3,900 crores of issue size.
Oh, okay. So does that mean that you might look at a follow-on fundraise sooner than originally planned at all? Would you be tapping the fundraise route anytime soon after this exercise?
Look, let me address it this way. I currently have, by the way, 1,100 crores on the books of Pine Labs. 800 crores for a working capital. But when you look at a net debt position, we have been positive for some time now. So from our standpoint, when it comes to day-to-day operations of the business, if you look at our financials, you would have seen that we have been EBITDA positive for the last 5 years. In the FY25, we came in with a positive EBITDA of almost about 355 crores. So to run the business in its current state, we have been healthily adjusted EBITDA positive for some period of time.
That's true. We'll talk about the financials in details in just a bit. I also want to understand if there have been any pre-IPO investors who've come on board in recent months, and how has the institutional interest panned out in the in the run-up to the IPO?
Today is the day when our anchor book opens and closes. By end of day, you will have a good look into our anchor book also. I think you'll get a better understanding once the anchor book is completed. As you would know, I'm not in the liberty to give any guidance on how the anchor book would look like. But let me put it this way. We feel
Sure.
comfortable today as the day has been progressing when the anchor book is getting filled up. Let's just wait for the day to get over. In general, I can tell you one thing. Pine Labs is a very unique story in the fintech space purely because we are not a consumer facing company. We are a B2B2C company. Every one of our transaction has a consumer
Yeah.
at the end of it. So what we have constantly focused on is, are you building the best technology layer? Are you building the best technology architecture so they can process millions and millions of transactions? And if we can do that, we will get support from our clients as well as what we are getting to see. We are getting to see a lot of support from the community also in general today.
Hmm. Point taken. Let's talk about your international market expansion as well. In terms of revenues between FY23 and FY25, just going through the numbers, revenue from international markets grew by nearly 58%. Of course, you are also using some proceeds to expand into Southeast Asian nations, right? How much of cross-border revenue, will this expansion really unlock going forward?
See, look, one thing which I have to point out is fintech in India right now is as good as it gets anywhere else in the world. Even if you look at other markets like China or for that matter, US, we are actually ahead of all of those markets. So some of the capabilities that we have built and we have engineered through our products and through our platforms, I personally believe it is completely world class. What we have seen over the last 3 to 4 years' time is when we've taken this platform into other markets, may that be in Southeast Asia, Middle East, Africa, we've just started off in the US, we're already getting to see tremendous success out there. That 58% growth that you talked of over the last 3 years is not like a flash in the pan. We feel super confident that our products and
Hmm.
services will deliver value and has delivered value. So I am really looking forward to what we can do in this entire international markets as we take our products global.
Hmm. All right. We'll also be keeping an eye out on that. Let's also talk about profitability, right? You turned profitable in the first quarter of FY26. And of course, profitability remains a key question for a fintech as yours, with high investment in technology. How confident are you of remaining profitable here on, and what would be the levers?
See, as you know, SEBI does not allow me to talk anything about the future. What I can only tell you is if you look at my numbers over
Hmm.
the last 3 years, there's a very clear trend which has come up when it comes to both adjusted EBITDA as well as what's happening at a PBT level. So, at an adjusted EBITDA level, we've been able to show FY25, which was at about 355 crores, while an FY24 was at about 155 crores. So we've done more than double when it comes to EBITDA expansion. Now, between the EBITDA line to what happens in the
Hmm.
PBT line, obviously what comes in is there are two component comes in. One is related to depreciation and amortization, but the other one, which is a big component out there, is related to ESOPs. See, one of the things that we've been very clear as you
Yeah.
develop in the new age technology space, it is very important for us to hire the best engineers, the PhDs, the statisticians who come on board, and they need to be compensated in a way where they feel part of the company. We've been absolutely open in terms of the whole sharing of wealth within the company. Almost 15% of Pine Lab stock is between past employees and current employees. And we see this as to be a very healthy trend. However, what that does is it does create an ESOP related cost, and that ESOP related cost then starts to affect the
Hmm.
line between adjusted EBITDA to PBT line out there. One of the things that we have done is we've decided to make some changes on our ESOP policies going forward, by which we feel what has happened over the last 3 years where the ESOP costs has not been increasing, it has been remaining flat or trending down slightly. I think that seems to be like a good trend to follow. Obviously, if you even look at the PAT line, we moved from almost 350 crores negative to about 140 crores, 150 crores negative last year to this first quarter, which is being positive. So, as I said, the trend is clear in our business.
Sure. You spoke about EBITDA margins, but contribution margins saw a slight dip. Uh, would you just, should we read it as a short-term cost pressure?
Contribution margin, the way I read it is 78 has gone to, sorry, 80 has gone to 78. Well, I can only just tell you it might be a mix in our business out there. As I told you, we are continuing to win market share. You would have seen the growth in numbers and volumes that I just talked about. No, it's just purely a mix in our business. But as I said, we are almost at about a 78% of contribution margin.
Any threat from intensifying competition? Of course, Razor Pay, Phone Pay are among some of them. And of course, you are looking at increasing your market share. Any serious threat, and are you well positioned to tackle it?
I can only tell you that if you look at the numbers where transaction volumes and value-based volumes are growing by more than 50% for 3 years in a row, using the startup terminology, maybe there are only a few days that I can use the startup terminology, but if I was to use the startup terminology, we are crushing it. So we feel very comfortable with our growth and how we are continuing to move forward.
So there's nothing keeping you up at night ahead of this IPO. Just one day to go for the
Not
IPO to open.
Not competition, but look on the IPO front. Look, I have to be completely honest. The reason I was 2 minutes late for joining this conversation was because I was in a review and I was completely submerged in my review just to realize later that I'm 2 minutes late for this call out here. Look, the way I look at it is my job is to work on the everyday of this business. I've been doing that for now more than 25 years. That's what I do well. Doing IPOs is not necessarily what I do really well. I do payments very well, and that's what I've been focused on.
All right, focused on creating value. We could say that then. But anything that you would like to say in terms of your revenue aspirations for the next 3 years? I know you can't give us a clear guidance, but anything in your mind?
Look, the way I would want to summarize this is that we have built out a very broad-based business out here. There are multiple products which are firing. You look at our business into detail in what is there in the RHP, you will see there are multiple levers in the entire fintech space where we are pretty much dominant today. The way I see this is fintech is one space where Indian entrepreneurs and Indian businesses can pretty much win in global markets. I really want to build a global fintech coming out of India. That's the aspiration that we work with every day.
All right, on that note, wishing you all the very best, Amrish. It was lovely chatting with you, and I look forward to more interactions now that you're hitting the market after every quarterly earnings. We'll look forward to having you on our channel as well. We'll have many more interactions here on. But wishing you all the very best for the IPO and, of course, the subsequent listing as well. Thanks a lot for joining in.
Thank you very much. Appreciate it. Thank you very much.
Thank you. Well, with that, we've come to the end of this edition of IPO Watch. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great day. Thank you for watching.